welcoming on board Nischal Maheshwari of CEO with Centrum Broking. Nischal, what do you make of Infosys numbers? Is there headroom left for Infosys post these numbers? The numbers were good, business is strong, and valuations attractive.
Morning, Kunj. I think a good set of numbers from Infosys. Yes, there is a disappointment on margins front, but I think I'm very enthused with the kind of growth which he has shown. Again, improving the guidance, the number of people they have taken in, this all actually is indicating towards a strong performance in the coming quarters. I think both Infosys and TCS, if I look at it, one thing is common, basically the number of people which they have taken in. I think that is definitely showing a very, very strong bench. But both of them have indicated, I think, some margins deterioration, and I think that will continue. So I think this is going to be a strong growth story, but obviously the margins are going to be a miss. Valuations are attractive as far as Infosys is concerned, and we prefer Infosys over TCS in this currently.
Right. Barring or rather IT, Nischal, what is it that you're making of Avenue Supermart's performance? The fact that it's been the slowest in 8 quarters, would you say that this would cause some derating in the stock, which is just so richly valued?
So I think, though we do not cover the stock, I have just looked the numbers very casually. I think there is pressure on the margins, I think, and that was expected. Given that the competition is coming in and more and more players, especially the Amazons of this world, basically go into the grocery, which is the prime focus for DMart. So I think that's where, but I am very enthused with the top line growth, basically. This still continues to be there. I believe margins is a short-term phenomenon. Possibly they will get it back. But I think the top line is a good number, basically.
What is the bottom line here? Would you buy the stock? Or the top line numbers are not convincing enough for someone to buy a stock at a P multiple of 80 plus?
That's right, Nikunj. Obviously, I think at 80 times stock, basically, I think this is not a buy for us. Though we do not cover it, but still I wouldn't be recommending a buy on that stock.
Sandeep, you wanted to get in a take from you on the... Okay, in fact, Nischal wanted to get in a take from you on the media space as a whole as well. This week we have Zee Entertainment's numbers coming out. Reports are indicating that we could see strong ad revenue growth as well. What's the outlook?
So I think media, this is going to be a good quarter for them, especially the ad growth revenue, basically. But I think the transition which is happening, especially on the revenues front, especially from the other part of the business, that is going to be a challenge. So that is what I think the transition which is happening. I think that is going to be a bit of a challenge for the media sector. But I think ad revenues is going to be a strong number for us.
All right, that's the take coming in overall on Zee Entertainment and what to expect. But the other big boy is going to be Reliance Industries. Jan 17th, in fact, Nischal, is when we have the company giving its numbers. And by and large, brokerages are seeing, profits could be a tad flat this time around. What's the expectation from the oil and gas business? How are you seeing the overall earnings?
So overall, we expect a flattish kind of a number for the current quarter as far as Reliance is concerned. The oil and gas margins have been flat as far as the GRMs is concerned, and that's what our expectation is. But we are enthused by the revenue growth potential, basically for the telecom side of the business. There we believe that they will continue to show strong growth. Again, on the profitability front also, I believe there is going to be a strong growth coming in from the telecom side. Overall, we believe, I think 10 to 11% kind of a growth basically is what we are projecting.
Okay. Nischal, this week we'll also hear from Reliance. we've spoken on Reliance, but I want to quickly go back to this entire corporate bank trade. Everybody and anybody is bullish on corporate banks. Some like ICICI Bank, some like SBI, some like Axis Bank. I met a fund manager 2 weeks ago, he said I like all three. I met another fund manager, he said no, I don't like three, I like four, which is again Federal Bank. So whereas corporate bank is a good trade, it's a trade which logically should make money, but it's just becoming one of those consensus trades. I mean, it's becoming like an NBFC trade of 2016 and 17. That's my only fear.
I agree, Nikunj, but I think the trade is yet to play out. Basically, if you really look at it, most of these stocks have been up by around 10 to 15%. But the recovery has started happening. So there are two things basically which are positive for them. Obviously, one is the falling interest rate. So their held to maturity portfolios on the bond side for the PSUs is going to be benefiting out of that. The second thing is the growth coming back as far as the corporate loans are concerned, given that NBFCs is going to be losing their losing out a bit on that front. So that should be positive for them. And the third is the recovery from the NCLT front. So I think these are two or three things basically which are going to play out in the next 2 or 3 quarters. So I think most of these corporate banks are going to do well in the next 2 to 3 quarters. So I believe there is definitely upside from anywhere between 10 to 15% for most of these banks.
I wanted to, get your sense on the charts on Reliance Industries as well. The fact that it's had a bit of a rough patch last week, and we've got earnings, although they'll only come on Friday post-market hours. But what's the chart pattern indicating about how nervous the street is about the earnings?
So, in terms of price performance, there is definitely some bit of cautiousness which is which you can spot when you see the chart patterns for Reliance, because the stock has remained more or less sideways in the last 1.5 months. I think December, the entire month, the stock was hovering around this 1120 mark. 20 points up, 20 points down is the range for the entire month of December. Even start of Jan, I think the range has just about gotten narrowed. So it's time for the stock to break out. So maybe like IndusInd Bank, which rallied first on the back of results and then gave a breakdown, you could see a similar sort of chart pattern for Reliance. Difficult to anticipate which direction it is, but I think a big breakout is due because the stock has remained sideways for the last 1.5 or 2 months, and that is uncanny to the nature of the stock price given the history over the last couple of years.
Let's also focus in then on some of the other stocks that are going to be in news today. In fact, we spoke about a brokerage day coming in on Z Entertainment, but other than that, there's a view as well on the Jubilant Industries as well that has come in from brokerages, Jubilant Life, pardon me. Nomura has come out with their report, and they're saying they expect a warning letter at Roorkee, and that could have a marginal negative impact. But by and large, the second half remains strong, and they're maintaining a buy with the target price at about 900 thereof. 948 to be specific on the stock. You also have the entire cement space, which is on the brokerage radar in trade today. In fact, it's CLSA. They believe that the demand momentum could continue, the good volume growth will continue, and by and large, the unit EBITDA could decline on a year-on-year basis, but sequentially could be flat. Nischal, thoughts on the cement space as a whole in terms of what the expectation is from the earnings basket? Do you think we could see some positive surprises?
So I think cement would disappoint actually. Yes, there has been very, very strong growth as far as volumes are concerned across the country. Basically, we've seen very, very strong volume growth, but I think margins are not sustainable. Rather, margins would be down for them, most of them, basically because there has been cost increases which they have not been able to pass through. So this is the best quarter last and the current quarter for cement given post monsoons, but still they have not been able to get any price increases, and that's a disappointment basically. With such strong volumes, basically if there is no price increases coming, it's going to be difficult for them to maintain the margins. Coming quarter, I believe some costs are coming off, so I think third quarter number should be better than what they are going to declare. Fourth quarter number is going to be better than what they are declaring in the third quarter.
Also have macros that will, to a certain extent, not really move the needle when it comes to the markets, but in terms of overall sentiment, you had the IIP numbers, Nischal, that slumped to a 17-month low, and economists as well are talking about that rate. Let's also focus in then on some of the other stocks that are going to be in news today. In fact, we spoke about a brokerage day coming in on Z Entertainment, but other than that, there is a view as well on the on Jubilant Industries as well that has come in from brokerages, Jubilant Life, pardon me. Nomura has come out with their report and they're saying they expect a warning letter at Roorkee and that could have a marginal negative impact, but by and large the second half remains strong and they're maintaining a buy with the target price at about 900 thereof. 948 to be specific on the stock. You also have the entire cement space which is on the brokerage radar in trade today. In fact, it's CLSA. They believe that the demand momentum could continue, the good volume growth will continue, and by and large the unit EBITDA could decline on a year-on-year basis but sequentially could be flat. Nischal, thoughts on the cement space as a whole in terms of what the expectation is from the earnings basket? Do you think we could see some positive surprises?
So I think cement would disappoint actually. Yes, there has been very, very strong growth as far as volumes are concerned across the country. Basically, we've seen very, very strong volume growth, but I think margins are not sustainable. Rather, margins would be down for them, most of them, basically because there has been cost increases which they have not been able to pass through. So this is the best quarter last and the current quarter for cement given post monsoons, but still they have not been able to get any price increases, and that's a disappointment basically. With such strong volumes, basically if there is no price increases coming, it's going to be difficult for them to maintain the margins. Coming quarter, I believe some costs are coming off, so I think the third quarter number should be better than what they are going to declare. Fourth quarter number is going to be better than what they are declaring in the third quarter.
Also have macros that will, to a certain extent, not really move the needle when it comes to the markets, but in terms of overall sentiment, you had the IIP numbers, Nischal, that slumped to a 17-month low, and economists as well are talking about that rate cut in the month of February that is definitely on the cards. You have the CPI as well as WPI numbers today. What's the expectation on the macro front?
So macros, I think interest rate is definitely up to there to watch. I think that is one thing basically which is becoming positive. The second is obviously the oil prices, which continue to be between $50 and $60. So that's another very, very big positive for the country. A bit disappointed with the IIP numbers. I think inflation is within its trajectory, so do not have much worries on the inflation side. But overall, I think this should be positive for the emerging markets and especially for India, given that growth is back. Growth concerns are sort of receding away after the last FOMC meet. So I think this should be positive for the emerging markets, and for India particularly because of oil. I think macro seems to be in a good spot. 50 seconds to go.
100 mark. Remember, we've been talking about the buyback news, the overall guidance as well, and what brokerages have been saying, and they've by and large been giving quite a thumbs up to Infosys. But Nischal, would just like to get in your overall thoughts as to how you're looking at Infy as well as TCS in terms of how you've digested those numbers as well, the overall valuations. How are you reading both of these candidates?
So I told you earlier also basically we prefer Infosys over TCS, and if I would evaluate the performance, obviously this is the second quarter where Infy has shown a much better growth number as far as TCS is concerned, and they have upped their guidance. Margins, yes, is a bit of a disappointment in this current quarter. But I think that is, I won't say temporary, but I think that's going to be there basically. Both Infy and TCS, I think they are facing challenges on the margins front, and that will continue. And the guidance also is around 22 to 24. Now, compared to valuations, definitely Infosys is in a better spot. It's in a sort of a sweet spot, basically 15-16 times. FY21 earnings looks interesting to us. And obviously the buyback for the top guys anyway is a very, very strong message for the whole industry. So top 3-4 guys have been continuously buying. So I think the whole industry seems to be in a good spot, but we prefer Infosys over TCS.
That's interesting. Nischal, just wanted to understand what is it that you're expecting from some of the mid-cap IT names as well. And the likes of a Mindtree and Persistent, where last quarter I recall there was quite a bit of disappointment. The stock markets as well made sure that the stocks get beaten down. And now suddenly you're seeing that bit of a build-up, at least in Mindtree I can say that. Even in Friday's session, this was one of the lone rangers within the IT pack. What is your expectation? Do you think we could see a significant revival in the likes of a Mindtree or Persistent? Or would they continue to be at best in line, if not underperform?
So I think Mindtree might come back. Basically, we are projecting around 12 to 13% kind of a growth for Mindtree. Persistent has been a bit of disappointment. I still see a lot of challenges as far as Persistent is concerned, but I think Mindtree should revive. Overall, if you look at it, most of these stocks have corrected almost 25 to 30% from the top. So they seem to be in good spot. Some of the mid caps which we like is Mindtree is one of them, and the Larsen twins. But obviously the valuation for Larsen twins is a bit challenging. But their growth is much better than the industry. They are all growing from 16 to 20%. So I think that's where our preferences is.
All right, stay with us, Nischal. Another stock that we're focusing on is we're tracking the promoter. Let's get right back to our discussion. Nischal Maheshwari is in conversation with us. And Nischal, curious about the outlook on the fund flows. We did see last year the largest outflow from FIIs from our market since the global financial crisis of 2008. But the sense is that we're seeing a bit of a pullback now in crude oil prices. There is an expectation of the current account deficit as well improving, and the overall macro picture seeing a better outlook. In light of that, do you think we could see FIIs reversing their outlook on India on the back of an improving macro picture?
That is what my call is for the current year, basically, especially across emerging markets. And it is more to do with the whole emerging markets than to do India alone. And India obviously has a better picture given that the oil prices are down. So I think that risk on trade seems to be now falling in place, because if you really look at it, there is sort of a synchronization of interest rates, reversal kind of a story, basically, whether from December 19th when the FOMC meeting happened, and they said that there are going to be only 2 dot plots, 2 rate hikes instead of 3. PBOC obviously cutting the CIR, and then Japan and Europe, I think all of them falling into line, saying that there is a question mark as far as growth is concerned, and I think interest rate hikes are too steep. So I think that seems to be falling in place. So a falling interest rate, I think this should be positive for the whole emerging markets. Currencies are in a better shape. So this year should be positive for the emerging markets. And India, I think once we are past this uncertainty about the general elections, I think we are going to see good strong flows coming in to the country again.
Right. Okay. Nischal, great to have you on the show. Thanks much for taking the time out and speaking with us this morning. Just very quickly, let's recap the 5